Why I shorted HDFC Bank Limited on the rally due to merger news and got benefited from it, and how such analysis can help you in future to identify and trade such news, especially when how HDFC Bank is trading at a discount when compared to ICICI Bank. But still, we need to know what's resisting ICICI Bank from rallying and why it's important to know it right now, especially when the results came on Saturday for ICICI Bank. In the next video, we will learn about two fresh debuts in my long-term portfolio based on the fundamental analysis. To get the timely update on the videos, you need to subscribe to the channel and turn on the notification button. But before we move further, two important things. First, an important disclaimer. Investment in stocks is riskier and can result in temporary or permanent loss of capital. I share my personal view for learning purposes. You have to do your own research or consult your financial advisor before investing. Secondly, typically I hold 20 to 22 stocks in my portfolio and follow 10 to 15 other possible entrants in my portfolio. I do thorough research on these stocks from publicly available information and keep myself updated on the news related to these stocks. Typically, I hold stocks for more than 5 or 10 or maybe longer years. But I always book part profits or average these stocks and use covered calls or secured puts for bringing the average prices as low as possible. Through this series, I will keep you guys updated on my portfolio and on the reasons for any changes. Hi guys, welcome back to Options Decoded. As I mentioned that now it's time to go in depth about all the types of trades that I take. This could be a slightly longer video, but be prepared for lots of learning that will help in long term. So recently, after the major news came out on HDFC Bank and HDFC Limited merger, I looked at the fundamental factors, then checked the charts, and at three different price levels, I booked all my HDFC Bank holdings and actually accumulated few puts, and right now sitting on decent profits thanks to the down move, and the profits should increase in coming days, especially when the whole world was bullish on HDFC Bank. Now, let's learn the reason why this was an easy trade to identify and how in future you can easily identify such trades on your own based on small analysis both fundamentally and technically. Firstly, let's analyze some fundamental reasons that played with market sentiments. Number 1, mutual funds holding limit. Now, with a combined entity exposure of major mutual fund houses has gone closer to 14% in large cap funds and 11.25% overall exposure to the fund. But thanks to SEBI guidelines, they can't hold more than 10%. So the stock is falling. Second reason, FII is selling. It's been second time since great financial crisis of 2008. HDFC Bank ADR is trading at a discount to HDFC domestic stock. Not only this, all their favorite stocks of FIIs are under pressure. It started with HDFC Duo, then Bajaj Twins, and next could be Reliance, as Reliance had been the stock that has been holding the markets for last two sessions. Thirdly, Q4 FY22 results were taken negatively by the markets. Predominantly it happened because HDFC was treated as a predominantly retail oriented bank. But what has happened? We need to know that in 2019, retail book was close to 55% and wholesale book was 45%. But right now, it's reversing. The change is getting HDFC Bank closer to its lead competitors in terms of loan book mix. Now, let's see the charts and identify a few things that help me technically identifying these stocks and go short on it. Firstly, the stock prices were far away from the moving averages. If you see on the charts, it was too far, more than 10% from its 20 DMA, 50 DMA or 100 DMA. It was too far and too quick. Easy candidate to go short. Secondly, check out RSI, which was more than 70-75. Thirdly, see the spike in volumes. All technical traders knows near the top there is always a spike in the volumes. See the chart. I don't think I need to give more proof on this. Thanks to these factors, it was an easy trade. I covered my holdings in three parts, at 1575, then at 1600 and then closer to 1650. And also added shorts close to 1650 levels and book half of my shorts close to 1400 levels. Holding other half still for the coming week. So now if you ask me, is there something fundamentally wrong with this stock? Of course not. HDFC Bank Limited is one of the best stocks to hold for long term. But all these are the technical issues that no one knows how they will get corrected. Who will buy these stocks, especially when FIs are selling, DIs cannot buy more, and it's tough to know what will move these prices up. These are tough volumes to fit in by retail investors. Till the time FIs don't pitch in, stock might go in this particular range. But with experience, I can tell you that when the earnings come for the HDFC Bank, stock prices will follow it. There might be some lead or lag effect. At the same time, who will buy, how prices will move, it's the function of the market. Very difficult to tell right now. Only market knows. Once the prices start moving up because of these factors, to win that, I am ready with my secured put strategy to buy these stocks at lower levels. Now, let's move to the second part of this video, why I do not expect ICICI Bank to continue its outperformance. Right now, on ICICI Bank, the whole world is positive. You won't hear negative from a single person. Everyone is buying ICICI Bank. Right now, mutual fund houses hold roughly 10% allocation into it. Now, as per the regulations, they cannot buy more. So even if the mutual fund houses want to buy, they can't buy. On top of it, FIs are selling. So we are left with either FIs start buying or retail investors starts to buy in heavy volumes. Or of course, if we get some sovereign participation from EPFO, NPS, etc., then there could be some up movement. So the whole problem in this sector is that it's becoming the allocation, where to invest in the financials. The banks one can think of investing right now is Axis Bank, which is inferior bank as compared to ICICI Bank or SBI, Kotak or HDFC Bank. So personally, I am holding ICICI Bank for now with covered calls to bring the cost as low as possible. I will be entering into HDFC Bank and SBI at the lower rates again. For example, 40% of the capital that I got freed from selling HDFC Bank will now move to SBI and 60% will go back in HDFC Bank in coming few months in 3 to 4 tranches. Right now, I'm building up with secured put strategy. This is the approach that I follow for my investment portfolio. Tomorrow, in the next video of the series, I will share the fresh debutant in my portfolio. With this, let me end this video. I hope you guys found it valuable. If yes, then like the video, subscribe to the channel, join me on Telegram to follow my trades, and let's create some difference together. Till next time, as always, happy learning.